Hi and welcome back to my channel. We have a very interesting day. The most important thing to get out of the way is rest in peace to Vivint Solar. This is a stock that made me nearly $2,000, a stock that a lot of people think was really left for dead and was not going to succeed, and something that I own 50 shares of and continue to hold on to. Clearly those shares have now moved over into Sunrun, and we'll talk about what that means. But rest in peace to Vivint Solar. It's a very sad day. And on a more positive note, we can talk about my portfolio as a whole. As we can see, down about $126 or 1% on the day. Interestingly enough, a lot of that actually was Sunrun. The stock tanked today, but as I mentioned, we'll get to that in a little bit. Down on the day, on the past week, down a minuscule amount. Over the past month, up about 9%. At 3 months, up 23.5%. Over the past year now, up 33.72%. And all-time, up 31.72%, or about $2,800. I did momentarily pass that $3,000 in total return on Robinhood this week. But again, my portfolio has struggled in the past few days, as has the greater stock market. So it's back down to about $2,800. I did deposit an additional $200 into my account this past week, which means my total investment is now up to $8,800. With that $200 investment and some cash I had left over, I purchased one more share of the Vanguard Total Stock Market ETF, or VTI, at $170.87. That would be my fifth share. And I purchased $50 more of Bitcoin. The quantity there was 0.004744 Bitcoin, and the price was $10,539. This is a very interesting one, Bitcoin-wise, because I'm just under 25% of a Bitcoin now, which is awesome to see. But now we'll get into the article talking about what this Sunrun Vivint Solar merger really means. And before we continue, I'd like to remind you to subscribe to the channel, like the video, and comment down below what you want to see next. It makes a huge difference. And as I alluded to, we have an article here from Barron's titled "A Solar Merger That Just Closed Will Transform the Industry." Country's two dominant solar development and installation companies completed a merger on Thursday, and it's likely to change the industry considerably going forward. Sunrun bought rival installer Vivint Solar, and the two companies now serve 500,000 customers with a capacity to supply more than 3 gigawatts of power. As they say, the total amount of power needed in the US is about 1,100 gigawatts, so that is a tiny amount, but it really means they have a lot of room for growth. So before the deal, Sunrun was number 1 and Vivint was number 2. Analysts estimate they control about 1/5 to 1/4 of the market, which is huge. The industry, which includes a lot of small local companies, hasn't had a large player like this before. Personally, I think that it's going to be really important, this merger, because of what Tesla's been able to do. And so hopefully these two companies can sort of compete now and really drop prices for the consumer. That would sort of be the free market explanation of the best case scenario. Here they go on to say installing solar panels on people's roofs has been fragmented and barely profitable. Sunrun and Vivint tend to sell their systems in lease-like deals. I've made videos about that before. The vast majority of people doing solar panels right now are not purchasing them up front because of the high cost. It does mean that these companies, again, are running leasing programs, which consumers tend not to like, but they've got to do what they have to do to make money. Scale will allow the companies to become more profitable because they incur costs up front and get paid back over time. The earnings of solar installers have been spotty and hard to predict. Companies expect to cut costs and get more efficient. That's another big piece. They forecast $90 million in annual cuts and think they can reap large benefits from scale, including procuring equipment and getting better financing. In addition, better margins should allow them to expand into more states where solar wasn't previously profitable. So here, Vivint's former CEO, who will now be on the board of Sunrun, says currently they're in 22 states, and he would like to see them get to 50 states. That's really cool to see and definitely important moving forward, trying to maximize the US market share. The new company, sporting $17 billion market cap and $22 billion enterprise value, they may also be able to attract new investors that had previously shunned smaller cap solar stocks. So here they talk about solar being stuck in sort of a small cap world, and again, this merger really opens options up for them. Moving down, they say when we agree to go solar on the roof, they're so much more inclined to do everything else that helps to bring clean alternative energy. There's so many things you can electrify, whether it's water heaters or just smart homes in general, so it's very interesting what's going to happen. It says the Vivint deal also shows investing in solar isn't just a feel-good exercise in helping the planet. There can be substantial financial gains in it. Blackstone, of course, the famous financing firm, bought Vivint Solar in 2012 when it was just a small part of a larger home security company called Vivint Smart Home. Blackstone's deal for both companies cost $2 billion, and Vivint Solar became its own company in 2014. So here we can see the Sunrun deal gave it an enterprise value of $3.2 billion. The value of Sunrun has more than tripled since July, and of course that's why I made nearly $2,000 off of that Vivint Solar stock. That being said, we will get to the stock right now, as Sunrun fell almost 10% today. As I alluded to, Sunrun had a horrific day, but the vast majority of this had to do with really the conglomeration of these two companies and some of these options traders really screwing everything up for everyone else. But 10% is not good, but at the same time, it's not the end of the world. So my total return is still up over $1,900. We can see down about 9% on the day. Some of these things are funky, such as my average cost and the percentage total return, because again, I purchased a different company that then was sold to Sunrun, and the way that the mergers worked, I'm not sure those are ever going to display accurately, but it is what it is. So Sunrun trading just under 71. Over the past week, down 9%. Over the past month, up 31.5%. 3 months, up 157. Over the past year, up 322. And over the past 5 years, up 561%. So really, from the 1 day mark out to about the 3 month mark, very, very similar to what Vivint Solar was looking like. This, of course, being that the two companies had already announced this merger a few months ago. When we zoom out to 5 years, we can see that Sunrun has seen a much larger return. So if we look down here, it was bottomed out at about $5 and is now trading for $70, which is great to see. If we go down to the earnings, we can see their earnings are all over the place, but they have had some positive earnings. If you remember, Vivint Solar had struggled over the past 6 to 8 quarters trying to make money. They were not able to turn profits. And one of the big hopes is that with this merger, Sunrun will be able to make money, have a larger share in the market, and hopefully make me some more money. This is an ETF I haven't talked about in a while. Vanguard Total Stock Market ETF, or VTI. As I mentioned, I purchased one more share this past week. I'm now up to 5 shares, makes up 7.5% of my portfolio, and the total return is up $108, or about 14%. Up on the day, over the past week, up about 5%. Over the past month, up 3%. 3 months, up about 10.5%. Over the past year, up 20%, and over the past 5 years, up 75%. I've mentioned it time and time again. Very satisfied with this one. The high price tag is a little bit different, or a little bit difficult for me weekly investing wise, but there is a decent dividend yield here, so about 1.7% to go along with this large growth. Very happy with this one, and of course it tracks sort of the greater stock market, so I think it's a good pick. Next up, we have Agilent, trading for about $104. Total return is up 26% on this one. Only makes up 3.5% of my portfolio, and the average cost is down there at $82.62. If we zoom down here again, we can see I have a pending dividend from Agilent. Those 4 shares are going to pay 18 cents per share. Dividend yield there is below 1%, but I did read an interesting article this week talking about how some of these tech and pharmaceutical and healthcare companies could be great dividend stocks in the future because they have so much more room for growth. The dividends are very low right now, but that being said, there is always room for those to increase in the future, which is what we like to see. So over the past week, we can see up about 3.7%. Over the past month, up 7.5%. 3 months, up 15.5%. Over the past year, up 42.5%, and 5 years up nearly 200%. 44% buy rating on Robinhood. I like this pick. Obviously, it's performed very well for me over the past year or so definitely a stock that I want to continue to purchase in the future. I'd like to mention Vivint probably once a month because it's probably the worst investment percentage-wise that I've made. Total portfolio diversity is only about 1.3%, and my losses are not nearly as bad as they were a couple months ago, still down 17.5%. Good news is that's only about $30 on this. I do have those 21 shares, and as I've mentioned in the past, very unfortunately did cut their dividend in half because these REITs have been hit very hard by the pandemic. So the past week, up 6.5%. Over the past month, almost no movement. 3 months, up 14%. Over the past year, still down about 30%. As I mentioned here, I'm doing a lot better. It was down here at about $4. Should have purchased then, but of course, no one knew what was going to happen with this pandemic, and we still really don't. So down about 10% over the past 5 years. And when we go over here to sort of the peak right before the pandemic, it was up 30% over that 5-year clip. but this was paying a dividend of roughly 7%, which meant that there wasn't really a need for a whole lot of growth. But with that dividend being cut significantly, not a great pick. The good news here is that it is still extremely cheap, and there is room for that dividend to go back to where it was. So let me know what you think about Vivint. The last stock for today is Corning, actually the smallest holding in my portfolio. Only reason I want to touch on this one is that I am looking at selling a couple of shares, or rather the 2 shares I have, in order to purchase some more shares of larger companies like Microsoft or potentially Apple in the future. So total return is only up about $12, but that is 22% on this one. This struggled for probably 8-9 months and then took off. Corning, of course, makes electronic components, most notably smartphone glass. So on the past week, up about 11%. Over the past month, up 5.5%. 3 months, up 33%. Over the past year, up 28%. And over the past 5 years, up 104%. A lot of these gains have been recently, so if we go down here to the beginning of the pandemic, Corning was down to about $18 and has almost doubled since then. So my decision to sell isn't based on poor performance, but rather the fact that it's a very small holding in my portfolio, and I would prefer to get into some of these larger blue chip stocks now while I can, just because of my weekly investing strategy. And it wouldn't be one of my videos without talking about Bitcoin. Total return is now $304, or about 12.7%. Portfolio diversity is down to about 23.3%. If you recall, it was up somewhere around the 25 to 26% range when Bitcoin was trading higher a couple weeks ago. Up about 2.7% on the day, which is okay. As I've mentioned sort of previously, I don't know that I want Bitcoin to succeed a whole lot right now because I'm trying to purchase as much as I can in anticipation of a large rise in 2021. So the past week, also up about 2.7%. Over the past month, up 8%. 3 months, up 15%. Over the past year, about 33%. And 5 years is where we start to see this larger picture, up 4,433%. My average cost is creeping up slightly. It does every single week. It's up to about 96.57. My total quantity, as I mentioned in the beginning of the video, is up to 0.248, or just under a quarter of a Bitcoin. And as I mentioned, again, makes up 23% of my portfolio. Very happy with how my portfolio's performed. And the big question mark here, of course, is Sunrun, because of how volatile that company has been. But I think there's a lot of room for growth. I think the solar industry is looking pretty good. And I'm hoping that we're not going to have a COVID-based recession at all, but we just don't know. So it'll be very interesting to see. I'll be back with another video next week. Thanks for watching. Bye.